Bikaji Foods, and lots happening in the snacking sector, and we're joined by Manoj Verma, who's the Chief Operating Officer at Bikaji Foods, who's joining us now. Welcome to the show, Mr. Verma. My first question to you is that GST on overall snacks has been reduced. So first of all, I want to understand that how is this overall going to impact your business?
Thank you very much for inviting for this show. Talking on the GST part, now if we look at GST was pre facto implemented. So none of the companies were paying. So those were the areas which had come up, and that was a challenge which this industry was facing. Now, of late, what is announced is that going forward, it will be the same. So there's no impact, of this the GST reduction. What no people are talking about at this point in time.
All right, Mr. Verma, okay, then let's talk about, your recently acquired majority in Ariba Foods. I want to understand that you've acquired 55% there. So what is the kind of synergies you're expecting there? What is the kind of top line growth that you're expecting from this particular business? Because it's into frozen foods, right?
So I think 3-4 quarters back we spoke about that. Now we were getting into the frozen foray of frozen space, and that's where we started one of our plant in Bikaner last year December. So I think this is the another milestone of that, and this completes our frozen backend capabilities. This is a long-term plan, so you will see over the years, these investment will start yielding the results. At this point in time, to us, frozen business is very small. No, majorly it's in the exports market, and this is to bring up or gear up the backend to get into this frozen space. That's where it is. So top line at this point in time, if you look at, is would not add as much, but I think in 2 quarters from now you will see that the results will coming in.
Okay. I want to delve a little deeper with regard to GST changes on snacks. I know you spoke about that, but just the reduction from 18 to 12, do you believe this was long called for, and do you believe that this is a good relief to your customer, and will it aid growth for you?
So two things, earlier it was 12%, and then with retrospective effect, this was implemented and made from 12 to 18%. There were a lot of representation from the industry players, and this was there now with the ministry. It is now that ministry has given the relief in terms of saying that it will be back to normal only. Even in the erstwhile regime, the GST, what was charged was 12 only. It was the arrears which were standing and which were companies were asked to pay. I think that's where is the relief, that going forward there is no carry forward. What government is saying is that whatever is pending, companies will have to pay, and for that I'm sure this lobby would be going to the ministry and putting forward this case. So from a consumer standpoint, there's absolutely no impact.
All right, Mr. Verma, I also want to talk about the recent hike in import duty of edible oil, because edible oil is one of your raw materials. Do you import edible oil, or do you source it locally? Will this impact you in any which way?
No, certainly it will impact, and not only to us, I think to all the major players, because this cost, this 20% increase is quite substantial. And eventually you will see that whatever companies can bring up by their efficiencies, make it up. But I think so beyond the point, this cost would be passed to the consumer.
And how much of a hike are you expecting, even if the cost will be passed to the consumers, but what kind of overall impact on the cost will it have?
I think somewhere between 2 to 4% kinds.
All right, in terms of the frozen food business, just wanted to understand what is the kind of contribution right now, and going forward from a long-term perspective, what will it be like, and what are the kind of margins in the frozen food business?
Okay, so I'll take the last question first. So margins are in line with the company's margin, because since it goes more in the export market, and there it's a cost plus model. So that's where it is. In terms of contribution, about 3.5-4% contribution comes from our exports business, and of the exports business, it's about 35% which comes from the frozen food. So that's where it is. Going forward, what we see that this the contribution in the exports business, this 35 would move up to about 40% over next 6 quarters.
Okay. Also trying to break this down a little bit further, just with regard to this this decrease with regard to edible oil. You said contributes roughly to, or just makes or gives you a benefit of 2 to 4%. So can one expect margins to creep up by that much? Is that the correct way to interpret this?
No, no. What I said was that with increase in oil prices, the prices will go up by 2 to 4%. So it's not a relief.
Understood. Okay. So therefore, what will be the margin impact for you?
No, so which is what I said that eventually this cost will go to the consumer because
Okay.
we have to safeguard our bottom line.
Understood.
I mean, if we were, yeah.
And just with regard to how you see growth coming through, I mean, phenomenal shareholder returns over the last 12 months, sir. So credits for that. But how do you expect top line growth to shape up maybe over the next 3 years?
So what we look at it is that it would be upwards of close to about 15% plus minus 1%. That's the kind of numbers what we are looking at. I mean, which would be ahead of overall food industry growth and the peer group. That's what the team is working on, and we have geared up our back end to support this stuff.
Mid-teens plus kind of margin, is that sustainable for you, or are you expecting some bit of dilution on that?
See, I don't think that unless and until some catastrophe or something goes beyond our control. But the kind of investment what we have made, the kind of readiness from the back end standpoint what we have done, I think that's pretty much doable.
All right, Mr. Verma, now I want to try to understand that what are the kind of trends that you're observing in the market when it comes to your product mix. Do you see that Western snacks are picking more pace as compared to the ethnic and traditional snacks?
Western snacks is very small pie in our entire kitty, right? So it will not be fair to say that no Western snacks are doing very well. There we have larger white spaces, so therefore Western snacks will continue to do better for at least next couple of years, and that's what we have said that currently it contributes to about 8% to our overall business, which eventually it will go to about say 11% kind of our stuff.
All right, and in terms of your e-commerce channel, although it's again a very small share, but it's growing at a significant pace. So what is the kind of trends you're observing there? Because the consumer shift is now moving towards the e-commerce business. So what are the kind of sales that you're expecting from that particular distribution chain?
So the e-com and particularly Q-com is doing extremely well. The platforms are very excited. They've geared up. And how I look at this platform e-com is certainly, there would be certain cannibalization from, say, from the general trade or a modern trade to e-com. But other than that, I mean, I see that this is helping category growth because many a times, you intend to have something only for the sake of convenience, you place an order. So that's a category opportunity. So, but certainly, people are moving towards QCOM, and this is growing phenomenally, high speed.
Right, and Mr. Verma, your exports in Q1 roughly contributed 3% to your total revenues, but you've guided that your exports will be growing by 20 to 25%. Of course, one of that segment will be frozen foods, but where will the other growth come from? Which segments will it come from? And then what kind of revenue uptick will you expect and overall margins also then?
So I'll take exports first. So what we said, so we still stick on what we said. We would deliver that kind of growth in the exports market. Amongst rest of the channels, if you'll see that modern trade would be growing at a faster pace, and that's how overall, if we see FMCG space, modern trade is taking the lead. That's where it is, and then followed by general trade, which is the largest of all. In terms of EBITDA, what we are working or what they're striving for is to gain say 50 basis point year on year kind of a stuff.
Sir, on distribution, you're doing incredibly well. The guidance seems to be 50,000 new outlets that you're trying to reach annually. Is this new geographies you're targeting within the country as well as outside? That's the first part of my question.
So it's both. It's both. So going deeper in the geographies where we are strong, what we call as our core markets, and then the rest would be focused market. Other than focused market, no, it will be a organic. Whatever is happening, will do. We will not be putting too much of weight there at this point in time.
So, sir, where are you investing? Because your capacities you've suggested will last you another 3 years. So, where's your utilization currently? And therefore, what will you do with all the free cash flow that's coming your way?
So that's a good question. So we are in terms of our capacity. I think we can double our sales in next 4 years, kind of a stuff. So till then, we may not need as much investment. It is only about the maintenance or the regular some NPD spend. So what we're looking at it is, one is that we look for some M&A, so some small acquisitions over the years. That's one. And second is that we'll increase our dividend payouts as well over a period of next couple of years.
Okay, thank you so much, Mr. Verma. It's been a pleasure chatting. Of course, interesting the fact that you're looking for acquisitions, inorganic growth opportunities. Will be fun to understand once you do that, take that first step.